Hello, people, and we got a great weekend update for you. Bitcoin obviously is continuing to pump. It's upper 47,000s now. It was past 8,000 at once, but that's not a big problem. Things go up and down, and this is just, a slight retrace before we go up higher. And there is a reason for this, not only because of the ETFs, but British investors have poured 403 million pounds. I don't exactly know how much that is in dollars, probably like $500 million into the market. And that, my friends, has definitely hyped up the market. So this is the third largest inflow for Bitcoin. And that's why we surpassed the $48,000 mark. But it's not from the United States this time. It's from Great Britain, the mother country as well. And obviously this completely overrides the Grayscale selling off now, but also it might actually play a large part into overriding the eventual Genesis sell-off that's coming. We just don't really know when. But if other countries are now pouring huge amounts into the Bitcoin ETF, BlackRock and Fidelity is going to be forced to buy as Genesis sells, and that might just make us not dump too much. Maybe instead of dumping 7,000, we'll only dump 1,000 or 2,000. This is why DCA is important throughout the days, because you don't really know when these things are actually going to come. Of course, all the publicity that the Bitcoin ETF has actually attracted is definitely working in its favor too. People are seeing it as a legit kind of way to invest. The whole thing about the ETF getting $3 billion, more than $3 billion on both BlackRock and Fidelity AUM-wise, is attracting more people to the asset. Because they're like, oh, not only, gamblers are investing in it, actual real people are investing in it. I think a lot of people just needed to see proof that this Bitcoin thing was actually legit, because we all know it's legit. But people out there, they really don't know. They were still hesitant about Bitcoin, but now since they see a lot of the big boys are going in, they're not so hesitant. The other thing is Ethereum is really, really coiling up for a pump because there has been a lot of money basically leaving exchanges on Ethereum. So there's been over $1 billion that have flowed out of centralized exchanges this week, just in a single week. That means exchanges' stocks of Ethereum are actually dropping low. And of course, this is leading up to the Ethereum halving. We're supposed to see somewhat of a similar effect that it had to the Bitcoin halving. Bitcoin's still going up, so Ethereum should doubly go up. So I do think Ethereum is a better investment for the next few weeks at least than Bitcoin. Once that halving comes, there's probably going to be a bit of sell-off on Ethereum and ERC20. But for the next few weeks, it should actually go up. So the tracker has noted more than $1 billion worth of Ethereum net flows left centralized exchanges this week. Ethereum's network fees, which indicate the willingness to spend and demand to use the asset, increased by more than 30%. Obviously, more Ethereum traffic, more Ethereum fees. People have been complaining about that today. So Bitcoin also flowed off centralized exchanges, but not as much, only about 300 million worth of net outflows. But 300 million, when you're talking about 1.4 billion, that's more than 20%. And if it keeps on flowing, that 1.4 billion is just basically barely going to make up for all the stuff that's actually outflow. Because if you don't have that supply on exchanges, people are still going to want to buy it, and prices are going to have to go up. So eventually that 1.4 billion may just act as a counter to all the stuff that's actually flowing off. And if if these trends actually continue, we could actually get to an all-time high before the halving. I still don't think we are, but it's a possibility lingering in my mind now because there's so much outflow from the exchanges and so much demand coming in from the ETFs. So the thing is, yes, we're continuing to grow by a couple hundred points, if not 1,000 points every day, and we are continuing to remain very, very strong. People are saying it's a bull trap, and the Genesis thing might actually make it a bull trap, but the overall trend is not a bull trap. The ETFs are finally kicking in their intended use to push Bitcoin up. I think we got over that initial phase. We just have maybe 1 or 2 more sellouts to actually contemplate before we're really in the clear. So that's very, very good news. The Gemini lawsuit is actually expanding, and this is the Genesis stuff. A New York Attorney General, Letitia James, has basically expanded their fraud case against Gemini, against DCG, and Barry Silbert, and against Genesis because they are responsible for $3 billion in investor losses. The main reason they're doing this, however, is because they said the customers' funds are safe, but they weren't. Now, Gemini did actually have a disclaimer, but you know those little fine print in the corner that no one ever reads? They're saying that's not enough. I kind of actually agree with them for this. I think instead of putting that disclaimer in the corner, it should be bright red in front for everyone to actually see. People should have like very good notice of where their money's going, if it's actually safe or not, because realistically, very few people actually read that fine print because they just assume it's going to be okay. So I think like companies should not be able to hide so many details in legal fine print. I think that's one of those like BS legal things that they've been able to get away with, and they should not be able to get away with it in the future. So they are being accused of misleading investors by assuring that their money was safe when that, according to New York, was not the case. And obviously, the New York Attorney General was actually right in this because they did lose all their money. And especially if Genesis said their money was safe, obviously putting it all into FTX and Terra Luna, not a safe thing, and they should have to pay for it. So, you know, like they don't really have the money. I think like 1.4 billion is the big sell-off. But we're looking at like 3 billion for responsibility, and they just don't really have the assets. Now, if Gemini is forced to actually sell off some assets, then we could have real trouble. And even if we go above 50,000, you know, like we could actually dump below 40,000. So there is like a bit of stuff going on. Like we might not actually want this to go against Gemini, but I actually think this is a legitimate case against Gemini, Genesis, and DCG because customers did lose a lot of money and they don't really have a way to get it back. And I do think these companies did actually misrepresent how safe their assets were. Now, obviously in crypto, you probably should read the fine print because crypto is full of scams and stuff. And even companies like Gemini will try to actually do stuff like this. I mean, all big companies try to hide stuff in the fine print. We all know that, right? But the thing is, like, I do think investors deserve like a slightly greater degree of protection when it comes to this. And they should actually make rules that, like, you know, for companies like really important stuff should not be in fine print. It should be in big red letters. And that's just not for crypto. That's basically for all things. So I'm actually pro New York Attorney General in this specific case based on a principle that, you know, like they are actually just trying to hide stuff in fine print. And they did actually make people think that like Gemini actually had all their assets and it was safe when they did not. And especially Genesis made people think that the assets were safe when they were not. So we don't really know how much of a sell-off it could be, but I guess like it could be as much as 3 billion. I think it's going to be 1.4, but we will actually have to see because this is a very, very interesting case that could affect a lot of things. And of course, athletes are actually getting on the NFT train. This might be one thing that could actually save NFTs, but not the $1 billion, like the $1 million crap JPEG NFTs. Actual like the NFT market, if athletes get in it, it could be like sports cards. Dwight Howard actually got in, and he actually thinks that everyone should know how this actually works, which is probably true. But you probably could have picked a better mascot at this point because Dwight Howard's kind of like, you know, washed. He's, I think, been playing in Taiwan for the last few years. He might be dominating in Taiwan. I'm not really sure if he is or not. But I don't know of how many people actually know him here at this point. Like 20 years ago, solid player, MVP caliber. And, you know, led his team to the NBA Finals. Got smoked by the Lakers, but at least he led his team to the NBA Finals. Right now, not really sure. Like he's kind of washed. You know, he did earn a championship on the Lakers a couple of years back, his only championship. But he ain't LeBron James, and LeBron has not made any NFTs. But I think if Dwight actually makes money on these NFTs, other NBA players will actually join suit, and that could be a revival of NFTs based on like sports stars. But I think the exception this time is you actually have to be a well-known person to actually make money on these NFTs. You can't just be like, hey, I'm going to make a picture of a monkey and sell it. But if you're an NBA star that makes a picture of, let's say, like a weasel, you know, you could actually make money off of it because that market's going to be a lot smaller. Now, I'm sure there's going to be people that impersonate NBA stars, and I'm pretty sure there's going to be a lot of lawsuits and scams on it. But I think like that does like whittle down the market because you actually have to be a known person to make money off NFTs at this point. And like I said, one of the reasons that NFTs has suffered, and I don't think it's really coming back all that big, is because like in the beginning, you can only mint NFTs on Ethereum, and that was a gatekeeper because the Ethereum fees were so high, so not everyone wanted to mint them. Now, anyone can actually mint on any blockchain, and since it costs cents to actually mint one on other blockchains, everyone can actually make them, and they're not a big deal anymore. So it basically killed the rarity as soon as they move on to other chains because they're no longer special anymore. It does not cost a lot to mint them, so there was an explosion in the number of NFTs. But the celebrity endorsed NFTs, and you're going to have to get a bigger celebrity than Dwight Howard eventually, maybe like Tom Brady or something. I think these could actually save the NFT market and really like start a new kind of like collectibles field. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.